Oh, baby. That's right. You thought I was gone, you thought I was dead, but here I am. Oh, yeah, you already know it. You know what time of the month it is? That is right, folks. We're going to be talking about the portfolio here, the monthly recap. How did we do in the month of August? Kind of a rough month, there's no doubt. But hey, we got the month of August, and obviously the video after this, you'll see a subsequent video talking specifically about the dividends we earned in the month. And let me tell you, it was a pretty big month. You maybe want to watch that video too. It's kind of a nice month. Anyways, let's get cracking because there's a lot we got to talk about there. I don't know why I have this start on our individual. Let's just look at the grand scheme of things on the month. That is the main story of the month here, folks. As you can see, that hurts. Okay, we're getting dominated. As you know, we breached 150,000 last month. It was a great video, great time for us. We breached 150,000, and it has unfortunately fallen down around 2,500 on the month, about 1.63%. Which, all things considered, seeing as we've had a pretty decent year, you bring that up, and up 42,000 is actually quite the hefty year for us. So, um, understandable if we get a little bit of pullback. So, let's go ahead and we'll take a look here at the individual account first. Touch a little bit on the joint, obviously small account that we have, but the main one here is going to be this. Our main individual. We've been building this one up forever, years and years now, right? 5, 6 years now, and I've really showed you almost every step of the way um, through this journey on this YouTube channel. And you can see this portfolio from beginning to where it's at right now. You definitely can. So that's what's really cool about this. So feel free to always look back at some of the old awful videos, and I'd be happy to provide them for you. Um, let's do it. Let's freaking do it, baby. Don't know why the cost basis isn't showing here on Arbor real quick, but we'll start off here. We're doing alphabetical, by the way, as one should. Eventually, maybe one day we could go by size, but start off with really our biggest position, right? Well, I don't think it is anymore, unfortunately. It might be. I'll have to take a look further down. Do you see that message that keeps popping up? It's very unhappy. Anyways, Apple, we've got 50.49 shares of Apple. And we'll just quickly go over, gain, loss, everything like that on these positions, just to make it nice and easy for you. So as you know, Apple, we got a great cost basis on this one. So we're actually up 169%, up around $6,000 on our Apple position alone. Very nice. AbbVie, 10.39 shares there. We're up around $441 on that one. So that's great to see. Now, why are you unhappy? Oh, look at this. Arbor Realty, baby. Look at all these lots. This is what we call dividend reinvestment. Maybe you folks should know a little thing or two about it. And let me tell you, you're going to learn about it if you watch the video coming up. So, following that, 206 shares here of Arbor Realty, by the way, 206.97. It grows massively every single quarter when they pay a dividend out, and I'm up pretty big on it. Let me just say the cost base is somewhere around $12 a share. Then we've got AMD, and even 15 shares of AMD, up around $396 on that one. Pretty excited about that. Very good position for us. Amazon, 16.18 shares there. Then we've got, and also Amazon, we're up $306, I should say, by the way. Apple Hospitality following them. 116.03 shares, pays a monthly dividend, 8 cents. Very nice to see that. Every single month I'm getting extra shares repurchased. It's beautiful. It's a beautiful thing. Up $163 also, so the share price is also up on top of the fact that I'm earning good dividends on it. ARI, that one's hurting from a share price perspective. We do have 189.8 shares, down about $84. I mean, all things considered, based off a $2,000 position, relatively break even, and does bolster about a 12% yield. So I'm actually up a good amount there. Looks like it's almost gonna rain out there all of a sudden. They've got Activision Blizzard. You already know it, the arbitrage target I've been talking about for a long time. 15.16 shares, up around $230. And again, eventually it's going to be purchased around this $92 share price line. So this is about what I'll be getting total in the position in terms of total return, about 19%, which really isn't anything special. But that's okay. I'll take a winning position any day of the week. Bank of America, 50 shares of Bank of America. We've been kind of adding to this one decently as financials have been getting hammered. Down $117 though on this one, so we're still, we're in a bad spot on it for sure. No doubt. Citi, another one we've kind of been growing up as well. Citigroup. We've got 22.73 shares. I'm down pretty bad on this one too. $163 down. Just because financials just continue to get hit, especially this month. August was a horrific month for these financial stocks. Then we've got Carnival Cruise. One thing I told you was this covered call that I had out here for the $17 price. Again, this thing was trading over $19 a month ago, and it's fallen about $4 a share here just in the last month. I knew it was going to get under this price, so I feel good there. Obviously, we're not going to end up having to sell these shares, so I'll be able to sell another covered call later down the road. On the position itself, though, we are up about $400 off our 100 shares even, so not too bad. We've got Costco, which continues to just burn it down, baby. 3.02 shares, up around $333, which is pretty nice because we're talking about a 25% gain. And I'm okay with that. Cisco Systems, 18.53 shares, up around $244. Basically one that's just a pretty consistent rock in the portfolio. Nothing wild on it. We've got Disney. My worst position, by the way, 30 shares here of Disney. I'm down 30%, or $1,089. Holy smokes, that's a terrible position. I've been getting hammered on it. Then we've got Domino's Pizza, 4.04 shares there. Relatively break even, up around $86. Not too bad. Another one I've kind of plan on holding. Just they're pretty consistent in their share price performance, pretty consistently in line or beating the market. So we'll see what they're able to do. We've got 160 shares of Ford, as you know, the previous covered call we had. Previous covered call did, in fact, expire, so we're good there. Didn't have to end up paying that. Sorry, I didn't have to end up selling our, an extra 100 shares. We are up around $446. Then you see some awful calls that were placed here that were a little bit short term. And then the market just worked against me, unfortunately. So, as you can see, we lost about $80 there. About $90, actually. That sucks. But hey, that's why we write those off during our taxes, okay? It's there for a reason. Then we have Gilead Sciences, 15.59 shares. They're up around $202. Not too bad at all. Gladstone Capital, about 99.33 shares there. $89 up, relatively break even again to about a 10% yield on this one, so I'm pretty okay with that. Google and or Alphabet, as you might know them, 10.18 shares. We are up about $411 here, which is actually pretty significant for that. We're talking about a 42% gain. Pretty nice. Home Depot, 2.03 shares. We've had these forever. We're up about $212 or 45%. We've had these shares forever. It's kind of wild. Home Depot's been around since the start of the portfolio, baby. Definitely a small position for me right now in terms of the overall portfolio. So, then we have HPQ, not HPE, just HP Incorporated. 26.95 shares. I'm up around $121. Stock that's valued so darn cheap, and I kind of like it at these current levels, but I'll be holding off. I'll be good. I'll keep it where it's at. Small position still as well. Hercules Capital, HTGC, one that pays a mighty dividend, by the way, around a 10% yield, plus they pay a supplemental usually. And I've been actually gaining in share price too, but we've got 113.67 shares, up around $133. So hey, we're gonna take that. Kind of getting the best of both worlds on this position. Then we have IBM, 6.24 shares, um, up around $177. Again, it's a consistent one. I like having that there, and I think their future prospects actually look pretty good, and they pay a pretty good dividend too. Intel Corp, Intel, a piece of garbage position for me, 16.72 shares. I am down around 27%, or $227. We've been getting a little bit of a comeback here, but still a bad position. And it's a small one still, too, which is not, good for that aspect. iRobot, 10 shares. Another arbitrage play, as you know. And it didn't work out well, too, for me because I'm down 24% or $127. If you might know, my average cost per share is around $51 per share, which technically means once this deal goes through with Amazon, I'm going to be losing a little bit of money on it. But look, I just want these shares gone at this point. I just really do. Then we have Iron Mountain. These shares I can't get enough of. I love having them. Iron Mountain, 60.86 shares. I'm up massively on this position. About $1,844 from a REIT, by the way, a real estate investment trust. 90% up, yielding over 4%. That's massive. These shares have been, I've had Iron Mountain for a hot minute, and it's been fantastic, and they continue to do great numbers. They really do. Anyways, after them, we have another, really a rock of the portfolio is Coca-Cola with 16.37 shares. They're up around $78. Really nothing special there. Kind of boring. Kohl's, which has been definitely destroying me a little bit here, 88.95 shares. I told you I was looking to get this one up to 100 shares, and that way I could sell some covered calls on it. But the premiums aren't super exciting with Kohl's. They really aren't. So I just kind of abandoned that. And I am down about $146 or 5% down. Not great performance from Kohl's, but they are yielding around 7%. And I feel decent about the dividend coverage. I do feel pretty decent about where that company's at right now and what they're able to do covering the dividend. So then, Atwater was pretty crisp. Lockheed Martin, 2.01 shares, so pretty small position. A newer one, as you might know. Down $25 or 2%. Nothing crazy. It's a small position for me. Lowe's, another pretty small position. 2.03 shares. Up around $173 or 57%. So actually really good performance. If I would have put more of my money into that, I'd be, this account would be a lot higher apparently. But not too bad at all. Then we've got Meta Platforms. I've got, I skipped Main Street Capital. How could I? Main Street Capital, you know them and love them, monthly dividend payer, 48.58 shares. We're up around $200. I guess really 280, I should say, or the equivalent of about 16%. A great dividend yield on here, over 7%. So it's been a nice one. Pays monthly, and I'm earning shares every single month. So very excited about that for sure. Then now we've got Meta Platforms. You know them, formerly Facebook. 32 shares here. This one's been a. What are you talking about? Get out of here. A great performance, no doubt. Up around $3,564 on this position, or 60%. It's been a fantastic performer, and I really am bullish for the future on this one. I really am. So I'll be keeping an eye out still. What in the world did I just do? Microsoft following them, 11.38 shares of Microsoft. I love this position too. You want to know why? I'm up around 88% or $1,754. Love this position. I really do. I'll be holding on to that forever, my entire life. Micron Technologies after them, 10.07 shares. It's been pretty good for me as well. Definitely ebbs and flows between certain price lines. Definitely a decent play for options if you're interested in that. But I am up around $252 or 55%. Pretty significant. Neo, you already know this one. 25 shares. I've just holding on to these 25. Just because I'm up so nice. It's kind of nice to see. Look at that. Average cost at $1.53 a share. Up around 617%. I used to be up around tens of thousands of percentage points when it was actually up at $30 a share, but you know what? F them. They've been terrible. So it's still up around $200. I'll just hold on to that one just like a what if. Who cares? Again, the cost basis is $38. So at the end of the day, I'm fine with whatever happens with that one. We've got Nvidia, pretty big position here, because we got 6 shares, which is around $3,000. I'm up around 2,000. $464 or a casual 549%. Now, some may say there's an error in the reporting of that cost basis, and that's most likely is the case. And because of that, I'm going to have to hold this forever, so that way I don't have to worry about paying the long-term capital gain on that. So let's just be real. New York Community Bank following them, 48, and I want to hold Nvidia forever anyways too, by the way. Just because I tell you right now, I didn't buy it for $74 a share. New York Community Bank, 48.52. This one's been a pretty decent one for me as well, up around $86. Really good yield on it too, so not too bad. Realty Income, now this is the monthly dividend company. You already know them. 53.59 shares, worth around $3,000. Decent position. I'm actually down on a per share basis, down about 5% or $165. Definitely up in lifetime when you include dividends, but share price just hasn't been great here this year at all. Then we get Omega Healthcare, which is one where share price has been great this year. 92.47 shares, bolsters an 8% dividend yield. And I'm up pretty massively on a per share basis too, about 11%, but $310 up plus, massive quarterly dividends. I'm happy about that one. Penn Entertainment, it's a piece of garbage position of mine, 25 shares. Small position still, but I am down about 35%. It hurts. It does, or $327. Then we've got PepsiCo, 6.13 shares, I should say. Up around $72 again. Well, it's just kind of being held as a rock in the portfolio. Not going to move too much. So, sorry, these dogs just wanted to go nutty. Following them, we've got a piece of garbage that's also kind of a what-if play. Plug Power. I already made my money on Plug Power, so I'll be happy to just kind of do what I want to do. I bought back in these 8 shares at right around $24 a share, and I'm down about 50%, 65% I should say. So it's a piece of garbage. Who cares what happens? It was off a $200 bet, and I made over $200 off my original play on Plug Power. So hey, you know what? F you, Plug Power. Prospect Capital, another monthly dividend payer, 6 cents every month. This one is wild because I'm getting at least 3 shares each month, which basically means every month I get 18 extra cents, which means and it just keeps snowballing. This is the snowball effect, and I will show you it in the next video. But 304 shares here, technically down on a per share basis, about 12% or $250. I am, I've earned more than that in terms of dividends lifetime on it, but, share price hasn't been great. So I'm okay to repurchase at these levels. Pretty happy to, actually, so not too bad. Qualcomm, 6.13 shares there as well. 6.13, common theme here. Up around $59 or 9%, nothing crazy at all. Rhythm Capital, this one's been a beaut for me for sure. 189.74 shares, up around $199, pays about a 10% yield. That's been a beauty. I don't buy it for the share price, I'll tell you that. Appreciation. I buy for that divvy, baby. Starbucks, 10.27 shares, up around $201 there. So not a massive position, but it's been performing well, and I'm happy to have it. Charles Schwab, been a rough year for Schwab. 15.22 shares, up around $67, so really not significant. It's a pretty small position, all things considered. We've got Stitch Fix, which I've been selling covered calls on to try to earn a little bit of extra money, and I've been earning just that, a little bit of extra money. So again, we got about 100 shares here total, down about $373 or 46%. Definitely one of my worst performers. Haven't earned that back in terms of these covered calls, but I've definitely earned a couple $20-30 off of the covered calls so far. So eventually we're going to scratch our way back and make something out of this position, do the best I can, I guess. Shopify, We've got plenty of shares of Shopify, 60 by the way, and they've been performing very, very well this week alone. So as you see, I'm up around 43%, $1,200. Very happy to have this in the position, and it's one I like long term as well. I really do. Stanley Black & Decker finally getting a little bit of better performance than when I initially purchased it. 10.3 shares, up around $51. Nothing significant, but we're kind of recovering on it, so not bad. Target, 11.29 shares, up around $74. Definitely a lot going on that's hurt it, but spending's still up, so I kind of like them. I kind of like where they're at. Separate the politics, I guess. Tapestry following them. This one's been a beautiful performer. 30.98 shares. Not a massive position either, but we are up around 53%, or about $362. Good dividend on it as well. Not too bad. Tesla, I'm up pretty massively on, a very small position because I only purchased the one share and a partial. So 1.3 shares, but hey, I'm up $137 or 76%. Pretty massive, for, short-term gain perspective to be up 73%. I'll take it any day of the week. Texas Roadhouse, happy to have this position on there. 10 shares. I am down. It's a recent purchase for me. Down about $39. But hey, I love having those shares for the future. I really do. Vici. Vici Properties. Not a great year for them either in share price performance, but 52.53 shares, about $81 up. Nothing significant. And then here we go, baby. This is actually the biggest position we own. Going to be Walmart. I've had this one forever too. 64.5 shares, up around $348 or about 50%. This one's been a beaut. I'm getting about $130 a year in dividends here. It's nice. It's a consistent one, not going anywhere. Love to have it. And the share price has been very beneficial for me this year as well. They've been performing very well. Then we get into our ETFs. We just kind of go over these pretty quickly. No one really cares about gains and losses in ETFs. We are down on a couple, but first off with this Wisdom Tree Small Cap Dividend ETF, 10.3 shares there. This iShares Core S&P 500 ETF, 2 shares, worth around $900. One of our larger ones here being JEPI, JEPI, 47.79 shares, about $2,600. JEPQ, their NASDAQ equivalent there, 23.67 shares. Wow. Sorry. I got that one for the dividend. I didn't mute myself for that one. I hope you enjoyed it. 108.77 shares of this KBWD, KBWY. We've got 80.91. MGC, this Vanguard Mega Cap ETF, 5.05. QYLD, not a massive position either, 51.86 shares. We've got SCHD, the Schwab US Dividend ETF, our biggest ETF, 46.44 shares there. Actually up pretty decently, about $200 there, so happy with that one. SPHD 44.98, another pretty large position, around $2,000. SPYD 25.05, another smaller position. There we go. SPYG, the S&P 500 Growth ETF from Spider. Oh, I hate these dogs. Anyways, then we've got VFH 10.248 and VYM, this Vanguard High Dividend Yield ETF. Then we've got XYLD at 10.6. I don't even know what these guys are yapping at. Freaking dogs. Why they got a yap? Anyways, 18.60 shares, I should say. My apologies. Then we got a couple fixed income instruments. As you might see, one of our CDs did mature in August, and you know what we did? We turned it back into a 5.3% Charles Schwab Bank CD. 5.3%. Not too unhappy with that for that $2,000 that we got, and we kept the other interest that we got, but it was not too great. We still have a couple CDs, one maturing later this year. This JP Morgan Chase 3.2% one. Nothing crazy about that. I mean, it matures in November, so I'm excited about that to kind of reuse that capital for something a little higher yielding. We've got this JP Morgan Chase 4.25% CD, and then a Truist Bank 5.3% CD as well. Just kind of spread out there between those couple institutions. And then finally, this SWVXX. You already know we've got this Money market fund rolling $4,664 from there. Nothing crazy, but again, we're talking about a 4% yielder right now, so I'm okay with it where it's at. Just kind of chilling there. Don't have anything I intensely want to buy, and that's why that's kind of where it is. Let's get into our joint real quick. About $6,400 here. Not too bad at all. We still have our 1 share of Apple, 2.12 of Arbor Realty, Ford about 5 shares, 1 of Meta, Microsoft 1. This one hasn't changed much, by the way. Realty Income 2, and 3 shares of Vici. DGROW, the iShares Dividend Growth ETF 5.05 shares there. JEPI, we've got 4.17. QYLD 6.21. SCHD, you know that one. 7.10. SPY, 1 share of SPY. SPYD, 3.02. VIG, the Vanguard Dividend Appreciation ETF, 1 share there, and XLF, 7.04 on that one. And we also again have a 5.3% CD from UMB Bank this time, actually. So hey, pretty nice yield on that one. About 2,200 in this money market as well. But there you go. We'll talk about our dividends earned here in this next video, so stay tuned. That's our portfolios. $148,000. Oh, baby. How's that for you? Bye.